Boys, welcome back to another vid. I know it's been ages because over the Christmas and New Year's break, I was just busy as fuck. But we're back. I've been excited to make this video for a long time because this one video is literally 98% of exactly how I trade. I've just been stalling it because it's a pretty big concept, but this is going to explain everything and how I get these trades. And as always, if I give you value, please like, subscribe, and let's get into the juice. So, overextension is basically the idea that whenever you have an uptrend or a downtrend, it has to have relief, like it just does. And I have very explicit ways of finding these tiny little micro moves at the end of these downtrends to get these ridiculous RR trades. And this concept is a strategy, so you need to be able to actually understand how to enter and exit. But it's also a perspective, so you need to be ready to take these trades and understand that when this is forming, this is going to happen. So there's kind of two different parts to it, I guess. So the question is, when you know that there's going to be a trade, you know that something's coming up, there's a massive downtrend, how are you actually going to take that trade? So, you have 3-wave overextension, you have slowing momentum and how to actually read when it's going to flip the other direction, you have trend cycling and range extension, which I'll explain, and then you have overextension succeed. So I'm going to break down these four individually. And just as another note, these uptrends and downtrends, when I say micro and macro, it's relative to what time frame it's on. So if there's like an hourly downtrend, your entry can be a 1-minute fractal catalyst. But if it's a weekly downtrend, it's probably going to be like a 15-minute or like an hourly breakout. So it depends what time frame you're on. 3-wave overextension. Let me explain this. So this one's actually pretty simple. It's just the idea that when you have some sort of downtrend, eventually you will have these swing lows. And if you get these three in succession like this, eventually you will have some sort of catalyst here, something in this range that will confirm and then break up, and then these will become your target ranges. So you get this 1, 2, 3 structure, catalyst, breakout. And you can see that here drawn pretty well. And also as a side note, I don't use this anymore, but if you do need to, these 3 lows will probably have divergence if you want to use that as confluence as well. So here's a beautiful example of that. And I'm pretty sure this is Gala because I remember taking this trade. But if we're playing this downtrend through, you can see we have one swing low, some sort of accumulation that fails. We have another one. And as soon as this fails for a third time here, I'm already looking for a trade. Like here, these trends cannot just keep going down and down and down. Eventually, there has to be relief. And having the idea of a 3-wave extension can give you that. But the general idea is being able to see this 3-wave extension, tiny catalyst, and then you have your relief. And you can see here, I've drawn this structure. So you'll be able to see this kind of structure on a lower time frame. So if this was like a 3-minute chart, this is probably a 1-minute little catalyst like this. And this moment becomes your entry and your stop loss. So if you entered here, you'll have stop loss probably underneath this swing low, which is fucking ridiculous RR. Because I know if this breaks, it's going to have a much longer accumulation than have an entry later on. So here's another example. First leg, accumulation that fails. We have a kind of like a longer accumulation, but also failing. We have a third leg. If I'm here in the move, I'm just waiting for that catalyst. And you can see the difference here compared to the previous chart. There's no real catalyst in here. Like there's no true micro accum. So I'm just waiting. I'm waiting. And then finally we have this kind of consolidation moment here. There's a little catalyst there. Take that shit. Goes straight up to the target. Then you have your downtrend, relief. And then from there you can just wait and see what is going to come next. And an incredibly important thing to understand here, this entry becomes structurally really fucking important. And this 9 times out of 10 is going to hold the move back up. So if we then go to here, we get a massive reaction on the center axis of this micro accumulation, because that's where it succeeded to move the chart up. So you have your first entry, first exit, then you can re-enter either on this micro accumulation or the center axis, depending on like what structure is forming, and you can catch these ridiculous reliefs as well. Now here's another example that's much faster. This is 1-minute chart. You have 1, 2, 3. And of course you'll have other TA and you'll be able to see what these levels actually represent. You have your catalyst and then a breakup. And then again, you can just set another buy over here for the same level, catch that trade as well. So here's another example. You have your leg, accumulation that fails again, but momentum's kind of slowing quite a lot. And you can see with all these wicks, there's buying happening here. So really here, we're just waiting for this accumulation to play out. And we're looking for some sort of catalyst in here, which we take, and then we get this play out. And here's the last example for this. Now this is on Bitcoin, but I would never normally recommend using it on it. It's just a pretty clear example. So again, we have this kind of structure here, first leg, second leg. Now this is a really important moment here, because this level must have been critical. I don't know if it was like a backside or an origin or something. Now you see how it grabs this, and then we have this accumulation here, micro accum entry. On the third leg of extension, if it grabs a critical level, you know there's going to be a fucking good entry, which is proven here. And again, with the concept of this level being critical for the future, look at the reaction that we get here. Because this area, A, lick grabbed an important level, but B, it's the confirmation for the whole reversal. And you can see that with how much fucking buy pressure came in here. And then you get these reactions here, which makes sense because of how important that level is. So on that note, if you ever get an accumulation like this, where you know that there's an important level here, if you kind of get either a micro accum below or a lick grab below, it's going to be a high quality trade. So that can already push you in the bias of taking that long. And also another random note on that, the idea of having 3 legs I completely found by accident by studying overextension, but it's also kind of the basis of Elliott theory because it's 1, 2, 3, 4, 5. But I didn't realize that until after I'd already studied the shit. So there's something. Okay, second strategy is just knowing how to read slowing momentum. Now this should be pretty self-explanatory, but you might not have ever thought about it, so I'll just put it in here as well. When you have legs that are like this, let's say this is your first leg, and then this is your second leg, here's your third. You see how each leg is getting a little smaller each time? This shows you that probably no buying in here, a little bit of buying in here, and now you're getting strong buying, which is why we see these accumulations here succeed, and then we have our targets here. So when you see this, you should already be able to understand, okay, momentum slowing, we can possibly be looking for a trade. Let's wait for an accumulation. And this is also where divergence comes in as well, because on RSI, this will have a divergence. If there's smaller legs, you'll see a divergence, because it means that there's not much strength pushing up each time. So if we play this through, you see this first leg, accumulation that fails, second pretty big leg, and then this third leg is pretty weak. Like, there's clearly some sort of buying in here, because it's not just dumping. Like, there's some sort of accumulation going on in there. And then again, we're looking for this fractal catalyst, which we get right here, microaccumulation, that's your entry. And then you can see how this plays out. Now, an important thing to understand here is when you have these downtrends, what are market makers doing? Market makers are buying in this range because they have to provide liquidity. So you should already understand that during these downtrends, this liquidity has to fill because when this goes back up, they're offloading their positions. So that's also just another thing to kind of keep in mind. Now we can play out another example. So a pretty big downtrend, accumulation fails. So now we're looking for that third leg to buy. So we're waiting for a third leg, which you kind of get here, fractal catalyst, bing, bang, boom. That's how you trade this shit. So here's a little bit of a different example because it's such a small time frame. So if we're looking at this, we're looking for momentum to slow for a short. So if I'm watching this play through, you see how here, on this leg, like we have a push up first, and then a second push up, but here it's really struggling. We get a third push up that kind of grabs, and it's just struggling here. Now, this is on 15 minute, but on 1 minute, I guarantee you there will be a catalyst in here to be able to get this trade. Because when you have these parabolic runs, there will always be some sort of retest, which is here, and you can see momentum slowing for this short. So instead of having to knife catch and think, okay, there's a 15 minute level here, and there's like a fib, and there's a fucking like POC here, instead of having to sift through all of that, you can just wait for this momentum to slow, get that fractal catalyst entry as a market, and take this. And if you miss that, there's an entry here as well. But the idea is being able to see that this is slowing momentum. And you can also see that with this drawing here. Like we're pushing up, but we're kind of struggling. And at this top, we get this point where you just know it's going to fail. And here, we get this entry here, which is right here, fails the whole move. Okay, so now we're on to the third concept. And just a side note, this is kind of based on cotton trends. So if you haven't looked at it, I'll link the video down below because you have to look at it. Because you have to be able to understand that, to understand this. But I'll give a simplified version here. So let's say, for example, the chart is moving like this. The idea with cotton trends is that when you draw your trends, you will take your first trend, which would be something like this. And when you draw this trend, you have your base point and you have your reach point. So your base is where it's coming from, your reach is where you're drawing it to. And the idea is that you keep arraying these out. So you take this reach as the new base and you get this trend, and then this trend. Now, essentially, this allows you to see when momentum is going to flip. Because if these trends get too steep, it's going to be impossible for the chart to move up. Because you can't just keep like going like this. Eventually, one of these trends has to roll over, which gives you this kind of trend. Because then it has to attack this trend, attack this trend. So if you have a parabolic move on an alt, or really just any sort of uptrend or downtrend, there will always be a final moment where you kind of roll over trend, you have a catalyst, and then you break down. And the reason why I call this overextension is because it can't hold. Like it's not sustainable being able to just keep moving up. So eventually has to break and come down. So again, let's look at some examples here. So in this move, we can already see, okay, like pretty good accumulation, strong as fuck origin. So already I'm thinking, okay, we have this uptrend. Now eventually, at some point in time, it has to break. So as this keeps playing through, we can array these trends out and start to see, okay, like this momentum is kind of starting to slow here. We've had a first leg, accumulation here, the second leg is much weaker. So I'm already looking to short this trend when it breaks. And if we keep playing this move out, this is very important because this grabs the previous swing high, which is already going to give you a bear bias. Now, I wish I could show you a smaller time frame, but essentially there was a catalyst here that I took, and this is a complete fucking breakdown because when this momentum rolls over, it's always going to be a good trade. And there will always be this final compression here against trend for the short. And they're always very easy to take. Like even if you look at this section here, if I'm playing the move from here, we already have this kind of trend here, and I'm already looking to short it. Like this is too extended, I know that there's going to be a short. And you can kind of see this accumulation here, or at least on smaller time frame you'll be able to, and I know that that is one. So you short this, and you get this breakdown. So it's the idea of being able to say, okay, like this has come up, and this is overextended, like there hasn't been an accumulation for a healthy amount of time. So I can already be looking for a short, and this is getting super extended here, accumulation against trend, and the breakdown. So you just have to remember that on these kind of runs, eventually there will be this compression against trend, and that is your short. And this is the exact same chart, but you can see against this second trend, it does the exact same thing. Where you can see the top is already in. We've had this pretty massive short here, so you already know that there's big positions. And again, we're kind of rolling against trend. We have this overextension moment here. Fractal catalyst, this little micro accum breaks again. And you can actually see that structure drawn here. Like we have these trends in here. First breaks, second breaks, and it just means this whole move is failing. So it breaks down. And let's play through another move. So we're moving up in this chart. We have this pretty good uptrend actually. But we already know like here, there hasn't been great accumulations. Like this is a super strong uptrend. So at some point I know that this has to fail. So we can already be biased. So our perspective is, okay, there's probably gonna be an overextension. This is way too strong. So we're waiting for that final trade at the top. So in this move here, we can say, okay, it's compressing against trend. We're waiting for a catalyst, but it doesn't really come. So here we're still waiting for it. This could kind of be it, but we're still waiting for that compression against trend. And here we finally get it. Like here, you see these wicks? There's super strong shorts here. And we get this micro accumulation in here, and that is your short. And whenever you get these perfect tops, it's gonna be a god trade. And you can just hold that shit until a major RS. And I've actually written a very important point here. So the steeper the trends are, the harder and the faster the move is gonna be when it moves down. So if your trends are only like this, and you have your chart like this, it's moving here, and you have this kind of move, it's probably not going to be a very fast move. It's going to be pretty weak, and it's not really what we're looking for. The kind of moves that we're looking for is this shit, where we have this, it's coming up, and somehow it keeps moving up, then eventually we have this trade. This is the kind of extension that we want to take. So let's just take a step back here and have a recap. So we have three-wave overextension. We have kind of how to read and understand when momentum is slowing and when to take a next trade. And we have this trend cycling idea and how to understand when it's getting really overextended to get that perfect microaccumulation short for your entry or long. Now, there's another tricky part to this, which is actually an overextension succeed, which are insanely bullish. So if you have a chart that's looking like this, and you're kind of moving up, and you already know, holy shit, this is pretty strong. If you are biased to taking a short, you can still be biased. But if you get a move like this, where you're actually compressing to the top side, you're about to have an explosive move, like a massive move to the upside, because it means that this was actually genuine buying, and it's not extended at all. And then if you zoom out your chart from here, this move is going to be insane. Now, I can't remember what video this was in, but in one of the previous videos, I showed an accumulation like this, and then we had this overextension here. Now, traditionally, you would say, okay, I'm going to short this. And at the end, there was this kind of push up here. This is going to be a fucking explosive move, and it's very easy to take these kind of trades. So here we have this three-wave extension, and I'm looking for that fractal catalyst to break in the opposite direction, which would be somewhere around here. If this breaks upwards, I'm going to be longing. And you can see that when this breaks up, it's a massive move. Like this is huge in relation to how big these previous legs were. Because what it actually means is that you have this sort of structure like this that is broken up. And you can long this so easily. So here's another example of that. We have first leg, second leg, third leg, I'm looking for that long. But when we have this catalyst here, that actually breaks up. So you see there's a possibility of an accumulation here, but we also have this kind of uptrend. If that breaks the opposite direction, I'm going to be shorting. And you can see we get this great trade here. And here's another pretty good example. So we're pushing up, we're not really accumulating at all, we just have this complete push up. But at the end, we have this moment of an origin. So you see this compression here that's actually like this. This is going to be an overextension succeed. Take this entry, we get this ridiculous fucking trade. Now, this is a little bit different, but it's still the same idea. So we've pushed up, accumulated, pushed up again, swung the high, right? accumulating again, swung the high again, but we have this moment in here. If we just simplify this, here's what we have. So it's an overextension because we're pushing up like this, and then we have this final accumulation in here that actually breaks up, not down. If this breaks down, I'm going to short. If it breaks up, I'm going to long, because the third leg. You long this, you get this huge move. So this is a super dank concept because there's so many ways that it can form on charts. But if you understand them all individually and how to bring everything I've said in the past together with this, you can get some truly fuck off trades. And when it comes to the next vids, when I'm actually evaluating positions and showing you how I would enter, overextension is going to be a huge part of that. And that's all I've got. So, laters.